Mondo. This is Ryan with TrendLizard.com. Good to hear from you again. I hope everything's going well. I'm going to take a look at the two tickers that you sent me. First one is XOP, which is the Spiders Oil and Gas Exploration and Production ETF. This is a really interesting ETF. I'm glad you brought this one to me, largely because of the divergence or the discrepancy between what's happening here and what's happening on the ETF that we follow for oil, which is USO. If you followed along with us with that USO, it's been a lot slower. The advance in 2016 has been a lot less dynamic, while this guy has been strong and looks pretty darn bullish. So here's a comparison of what's going on with XOP relative to USO. XOP is the green line here, and you can see how strong it's been in 2016. Compare that to USO, which is this kind of light orange color, which has been a lot flatter in 2016 and really hasn't had this nice dynamic up move in 2016. So very interesting, and it really plays out when you look at the Elliott Wave differences of the two. So let's go ahead and do that. Let's take a look at XOP, and I know I've looked at this for you before, so let's go through those charts once again. Here's a look at the long-term outlook on XOP. It was in a massive counter trend move from 2008 into the 2016 low, just one big counter trend three-wave move. I told you last time this had the potential to be the start of a much larger up move, and it seems like that's played out to this point so far. So this is a really nice base, a ton of potential here. So let's keep zooming in and see what's going on. So here's a look at the decline off the 2014 low into the 2014 high into the 2016 low. This looks like an ending pattern to the decline, a big five-wave ending pattern, and that's what set up the potential last time. So let's keep moving in here. This is really the golden chart here. This is the advance off of January's low in 2016. At that time, I noted how trendy the up move looked, and that has really continued to look trendy since the last time I talked to you, and I think last time might have been in July or somewhere around there. It's still a nice trendy five-wave move. It looks like the initial five-wave move ended in September. There was a three-wave pullback that ended in November, and since then it's been strong again. So this looks bullish. I can't really explain why it looks so different than USO, but hey, this is a trendy move. It should be expected to continue. For me, I would be bullish on this guy as long as it's trading above 37.50. As long as that's the case, this up move that started in November can really continue significantly higher, and that's a bullish thing that can certainly be traded with a stop at 37.50. There is a potential that it will find a high somewhere in this yellow area here, but even if that's the case, it has a lot of room to move to the upside, and at this point it looks like it's going to. So again, I would say be bullish on XOP and expect higher prices as long as it's trading above 37.50. Thanks.